Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Appreciate you visiting the lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and you're always invited to the Trader Lab. This stream is about integrating Bookmap order flow tools with auction market theory. Traders. Welcome to the Traders Lab. I'm your host, Tom B. Appreciate One moment. You visiting the lab today. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis to overlay structured trades in the intraday developing time frame. This is day trading. Now, the thing to understand with day trading is that internally or inside the market, it is continually rotating over itself. And when we think about market mechanics, the market does need to rotate, because let's think about how markets work. Market goes up, their sell stops trailing behind the market. We run out of buyers. The market's going to counter rotate into the sell stops under it. Then, of course, the question becomes, are we just going to go back and forth in a balanced market, or are we going to rotate and make let's say if the market's going up, have a higher low of the rotation and then continue higher? Or do we just slosh back and forth in two-sided trade? And the thing that's difficult for us, of course, is it's changing all the time during the day. So overall, let's say today is an example, and I'll show you why, it was longs only, or let's say primarily, subject to your plan, yet the market would rotate. So how do we deal with that? Well, if you have a trade plan, you understand, of course, that the market does rotate. So your plan needs to be built around what you know, not what will happen or when it will happen, but what might happen. That's the best you have. So if we have a plan, then it's a matter of an alignment issue, not a predictive one. We're never here to predict what the market's going to do, because we have no idea. And if you're working on being right and predictive, that's all psychological, has nothing to do with the business. This business is really about having a statistical edge and taking as many samples as you can of that edge in a consistent, disciplined manner, and accept that you don't know the outcome and you can't avoid risk in order to achieve gain. That's just the way it is. So the psychology is going to interfere with your ability to detach yourself from outcomes and change your viewpoint to attaching yourself to randomness, but with edge. The outcome favors you. It's a different, so it's not each trade is, win, lose. It is a sample. And the need to be right and all the psychological things are going to be your biggest obstacle, in my opinion. And I always like to talk about that, because anyone who comes to TraderLab, in my opinion, can learn how to trade if they do the work. The obstacles are going to be actually doing it. And you guys already know what this feels like. Fear, looking for certainty, more indicators to get more certain, all this kind of thing. It's all part of our primal DNA, our wiring. So when you're making choices or having emotional triggers in the trading environment, you need to anticipate those behaviors or triggers emotionally, because it's just part of our wiring. You're going to feel it, and then interrupt it. So every time I put a trade on, I have that certain sense of anxiety, and is this the right, all that, right? But I've learned that I'm always going to have that question. And what does it do for me? It doesn't do anything for me in trading. It doesn't change the outcome of the trade. If I'm more certain, I don't get better results. In fact, certainty typically leads to late entries, more risk, but not a better outcome. So all those emotions to avoid risk, create certainty, and the rest of it, being focused on P&L, are really not what this business is about. So that's something that if this is something that you can relate to, then TraderLab might be for you. Because not only do I focus and share trading in the sense of the mechanics, understanding how the market works, structured trades, and the rest of it, I also focus on, because the big obstacle for us is the psychology, it's ourselves. And you'll never know about yourself based on what you experience in planet Earth. Your success, all the things that you have here, avoiding risk, being certain, being right, getting your ego. That doesn't exist in the trading world, but we're going to bring it to trading world. We have to kind of realign ourselves to the environment of trading. And I hope this makes sense, and this is why I created the TraderLab, to help traders learn the business of trading and differentiate. Oh, Matt, thank you. I just thought, and Marty, thank you too. General disclosure, all Bookmap Limited materials presentations are for educational purposes only and should not be considered specific investment advice or recommendations. By the way, be sure to review these streams. Now, I'm going to go over the higher time frame, which sets up targeting for today and behavior. You need to see how pieces fit together. Now, none of this is predictive. Remember that. All it is maybe. Maybe it'll do this, and write this down. Take a couple of notes. The best you have in trading is maybe. That's it. You have nothing else. Now, you can develop a trade plan, but the maybe never goes away because it's always random. So there is no certainty. There is no special quote setup that's going to, get you to move the ATM in the basement. It doesn't work that way. What works is discipline over a random distribution of outcomes, and your job's just to take the sample, just to take the trade, take your stop if it doesn't work, protect your account, and if you actually have an edge and the discipline to execute it, that's where the net comes from. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. If we get there, we talk. Right? Now, don't forget, there's a contest going on for the month of February. You still got some time, but the clock, as they say, is ticking. You can win the coveted blue jacket. Now, and all you have to do is submit screenshots that are annotated showing your executions on Bookmap, whether you're using the on-chart or the dome, doesn't matter. They should be annotated. They could be actual trades. They could be replays. They could be sim. They could be anything you want. Submit them. The winner gets a invitation to the Bookmap Academy. It's kind of an exclusive club of sorts of advanced order flow users, and not only that, you could win 3 months of Global Plus free. I like free, and free data, either stocks or futures, for 3 months. So I like that. What about you? My mother always said free is good. So get yourself in there, get going. Now, this is the process I'm sharing here every day in the stream. And there's a full library of webinars and a document section available to all of you in the TraderLab. There's no cost for it. If you're in YouTube visiting, how you doing? And there is no cost for it. Use a link in the bottom of YouTube if you're interested in being in a serious business-oriented community. It's not romper room, just so you know. This is about business. This is the process I share here. The market is an auction, so it's not your indicators. The purpose of the market is to figure out what's too high, what's too low, and what's fair. Okay, shopping. You go to the store, you shop, you already understand trading. How about that? What you don't understand most likely is this integration of time frames, where the trend might be up in a higher time frame, we might be short, at one point during the day, in the intraday time frame, turn around and get long. What are you doing, right? Well, depending on time frame, you could be short and other traders are long. And of course, everybody trades the quote time frame. I don't see the market in time. I experience the market in rotation. So it's just a different way to look at it. Time is regimented and fixed. Participant behavior is just that. It's not time-based, it's participant-based. The auction is based on participation. It's not based on backwards-looking fixed indicators that are time-based, in my opinion. Now, how do we see this behavior? It's the volume profile, and it's very simple conceptually. If the price gets too high, you won't pay it, right? There'll be less volume. If the price goes on sale, and it's too low, it's a sale, you throw a 5 in the cart. It doesn't stay on sale. It rotates. So if the price is too high, the price is going to come down. It'll come back to a high volume or retail price. If it goes on sale, 10 in the cart, and then they raise it back to retail. So this rotational behavior is taking place in all time frames. And I'm using the term time frame just because you're familiar with it. For me, it's not time. It is rotation or distribution of volume. So that's too high, too low, fair. You'll see it. Time frame is how do you operate? Now, this is what you refer to, time frame. So think about time frame. In the sense of time frame, RTH open and close, high, low, close is a day. That is regulated by time. It is the day's distribution that gives us a benchmark. Now, some of you are going to say, well, I use weekly, I use monthly. You use anything you want. I have no opinion on what you do. I'm way past opinions. I just go for results. So whatever gives you the result. In fact, on the trade desk, we had a magic 8-ball. And I'll tell you, compared to some other traders that I've seen over the years, the magic 8-ball was actually a little more reliable. So context, this is the big problem. Context is what's the condition of the market, and in different time frames you have different context. So depending on time frame, you might be today taking longs only. Other traders are going to take longs and shorts, right? Or other traders would just be taking shorts and wouldn't be taking any longs. It's all about your time frame and your trade plan. And then Bookmap is the order flow tool. I call it the tip of the spear. So when we're going to actually execute, we're going to look at order flow and how it relates to all these other elements. Anyway, I wanted to give you that. Now let's go to the higher time frame. And if you have questions, please post them. I'll do my best. This is the as of yesterday. Now let's talk about kind of what was going on here. We had the Acapulco cliff dive, which you guys are familiar with, a very nice day in TraderLab. Then the way this might work is when you have this kind of sell-off, we anticipate, and this is Friday. And don't forget, we were closed Monday for President's Day. So this is Friday. So this is Thursday. So we anticipate anybody who's still long might, and late sellers are going to sell. So we took shorts in the morning. Now the other thing is on a Friday, we also anticipate ahead of a 3-day weekend short squeeze. So the plan for Friday was shorts to trap sellers in here and then to come across and squeeze these sellers and squeeze these guys to a certain extent in here. And that part of the thrill is to where. And again, no clue. Now let's look at yesterday. And don't forget, Monday we were closed, so that data is removed. Here's what's important to know. If this was short covering on Friday, let's be logical. What might happen on Monday, or Tuesday, I should say, because Monday we were closed. The shorts that covered in this squeeze now reinitiate. And there's the selling. Now, the target area down here, which was too low, is right here. It's 90. And what's important about this price here, and this is all the way back, where is this date? December 17th. This is a key level. If we get under here, then I'm going to the fallout shelter. So this is support. Here's our low. Now, no precision, this is what I like to use the term horseshoes and hand grenades. So all of these, this is an outside edge, this is too low, and there's no way to know. It's the same concept as this. Once we get our sellers in, then what might happen? Same process, squeeze. What about here? We get our sellers, squeeze. Then what? Well, if this is against a key location and it's too low, then what's the possibility, you'll ask? Now I have what? Shorts, buy stops here, buy stops here, value area high over here, which is around 15. It's a target. Next target is up around 23 to 25. right there. Write those numbers down. And where do these things come from? They come from the auction. 70% of the volume on this day took place in this yellow box. So most of the so this was an outside edge. Well, if it's an outside edge, I can come to it, this, and if it's too high, I can rotate. Now, if I keep going, 45 is my next target. So let's see how this all works and how it might show up. Now, let me show you, and this is all in TraderLab this morning, and it's not right, wrong, it's just maybe. Maybe it'll do this, maybe it'll do that, maybe it'll go to that target, maybe it'll go to this target. See? So if you're in TraderLab, at least for me, it was longs only today, and then going for stops there, target here, maybe up there, maybe not. Okay? Is everybody with me so far? This is TraderLab. Now, happens. You know, what stays in the TraderLab, what? What was that saying? What happens in Vegas stays in Vegas. Well, I'm here to share this with you. And it's not the answer. It's a process. You still have to do the work. I've shared 60 PDFs of structured trades in the TraderLab. Now, here's the important thing. And I know we're all going to be disappointed. There is no plug and play. I know. Wouldn't it be nice? Do this, and now there's an ATM in the basement. It doesn't work that way. You have to understand how the market works. And I can share with you, and I do share, an understanding of market mechanics. But it's going to take time to get outside of a mechanical process and move into more of a competent or unconsciously competent process where you kind of get a sense for the possibilities and you anticipate them. Now, we can use structured trades to begin to understand that and to decode it. And that's why, because initially I created some of the trades I share in TraderLab are structured trades that I created initially for myself early on. Now, I've been doing this 47 years, and the benefit I have of doing it 47 years, not only is all the screen time, but it's also all the mistakes, all the errors, all the lost years, all that need to be right, all the squeezing the risk out, always looking for certainty, always looking for an answer, always asking the same questions, and always getting a random answer, not knowing. Being fearful, looking for certainty, right? Does it sound like you? Now, let's go to statistics. We are opening, where's settlement here? Got to get my brain in gear. It's down below, I believe. Higher in range, right? Yeah. We're opening higher inside of, so there's the settlement, there's the RTH open, and yesterday's high is here, stops are there, and then I have, let's see what else I have. I have another high up here. I have the ETH high over 90% probability. I have about an 80-ish% probability of taking out yesterday's high or low. I'm leaning high. How about you? The ETH low tested a key level, which for me, 50 was a key level. It's on my chart, resting liquidity. Okay, next piece. Yesterday's high volume. Retail price, fair price. All right. Settlement, overnight volume point of control. That one has approximately an 80% probability. Value area high, yesterday's value area high. Taking value area high or low, one of them lost it. 91% probability, past performance not indicative of future results. ETH high or low, 98% probability. First hour high or low, 98% probability. Where am I trying to go? North. Let's look. So now I'm going to start showing you trades. Now I'm going to keep this as simple as possible, which is what I try to do because there's no reason for complexity. You need simplicity so you don't create conflict. So the more our nature is to put more indicators or tools or whatever to create certainty. I understand it. You understand it. The challenge with doing that is the more you introduce on the input side, you don't create more certainty. You actually create more randomness. So in my primer webinar, which has about 36 or 38,000 views, and you're all welcome to look at it, it's in the library in the TraderLab, I talk about anchored inputs. So, and that's really so you understand gaming, because gaming, when they play a game in the casino, it's anchored. In other words, they just play it the same way. They don't know the outcome. Once the cards come out of the deck, they're random, and how gamblers play the cards are random. So what is under control? How they play the game. They play the game exactly the same way every time, because the only way they get the extract their edge over a random distribution of outcomes is playing the game. Well, what are you doing? You take 2 losses or 3 losses, you skip the next trade, or you take a loss, next trade, you manage it differently because you don't want to, quote, give it back. You're already in the hole. Now you see the market moving after you got stopped out and you have FOMO and you chase it. Is that you? Well, let me tell you, it's all of us. The difference is you got to learn about it and you got to interrupt it, because and it doesn't matter about your intellectual capacity to make a decision. In the moment, your brain is scrambled by these emotions that are primal. So how do you deal with that? You got to learn about them and interrupt them. So when I'm looking at a trade, I'm feeling that anxiety. All right, I always feel anxious. Fine. Does it change anything? No. How about after I take a stop? I take a stop. How do I feel? What's my impulse? I recognize it. I don't react to it. What do you do? Because you're going to feel those. So if you know it, shouldn't you be preparing for it? Not just, I'm going to white knuckle the edge of the desk or chew on it, not do it. Isn't it more like, when this happens, I experience it, so that's okay? I'm not going to put energy into stopping it. I'm going to put energy into recognizing it, and recognizing my response is not positive. And I grade myself, and this is what you should be thinking about, in my opinion, following your plan, not the outcome. The P&L is the outcome of the edge, and the P&L comes from the discipline to execute the plan that has the edge. The random distribution of outcomes is not under your control. So what's a good day? You can look at P&L and think it's a good day. A good day is actually following your plan. The P&L is just the outcome or the output of the discipline and the plan with an edge. Does that make sense? So let's look. RTH open. It's very important you understand this, because if you haven't thought about it like this, you really got to focus on what's most important. Anybody can learn how to trade. You only need one structured trade for proof of concept. You can get that in the TraderLab. But if you're in a hurry, that's FOMO. This is not about the money. The money is the outcome, the output. This is not about P&L. P&L is the result. This has an 80% probability. This is the retail price from the ETH. What do we do? We open, it's too high. Right there, I get this rejection. I know this is my resistance. Now let me show you. I'm going to go into micro. This is not a trade anybody ought to take. These are opening trades. These are the most aggressive, highest risk trade you could think about. And if you're a developing trader, it's not a good place to trade. Too fast. And you have no structure. I always suggest to developing traders, wait. You got all day. When you feel FOMO, you're out of control. Recognize it. So here's what I do. It's a very simple process. What's the language of the market? This is too high, resistance. I'm not paying that, right? All right. Now, here. This is too high, microstructure. So what's happening here is this. I open, I have some buying. Now we're in here, what? Not even a second, so let's not get carried away. This is too high, microstructure. There's no volume. This starts at 0. So right here, what do I know? This is the auction. Too high, Now, if I cross above it, changes it, right? But I'm staying in alignment. What's this? Too high? I don't know. What's this? Support right here. So I have resistance, I have support. Which one is it going to be? What this is showing me is where the buyers were. This is showing me the volume and where the sellers were. This is absorption up here. This is absorption down here. So sellers and buyers. Where's it going? I don't know. Let's see. Do you know? I don't know. Oh, what's this, Tom? Too high? Maybe too high. Let's look. Microstructure, you see? Now what? Great question. So what do I know about this? This was support. Support becomes what? Resistance. I'm going to put another little one here. Now, guys, what I'm doing right here is advanced, and it's advanced because you need unconscious competence to decode or decipher this, or I should say interpret it. I look at this like language, and this is speed reading. So you have to already know what you're looking at. Let's look. VPOC migration. What's this? VPOC migration. What's this? VWAP in mid. So right here is my new retail price. So everything is suggesting at the moment lower. And I want to get long based on everything we've already discussed. And I'm going, you know, that's basically what it is. Now I have an outside edge down here in the intermediate time frame. Let's see what happens with this. Resistance. So resistance right there. Resistance up here. Should be there. That's off just a hair. Resistance. Come on. Resistance. New retail price. Coming down. Location. Resistance. Resistance. Okay? Let's watch. Now, going down, going to zero. Location. Here's how this works. So I'm looking out here to get long, and I'm looking to come across the range, and I have statistics up above. Remember, yesterday's high, actually yesterday's value area high is a high probability target. Stops are here. Everything for me is go long, put a helmet on, and hope for the best, right? Where's my, there, and go here. So this is my primary objective. And if I get above here, I've got 15, which is what I showed you at the top of the stream, because it's a previous value area high. And then I have what? This 25, or this area, 23, 25. So it's this, okay? This target, and there's resting liquidity. So my plan is for this. And then if I can get above here, 45, which is there. All these are on the chart, okay? So you know, in this. Okay, so it's longs. Let's go. So the first long is here. Now, I need it to cross over. So when I come out here, this is resistance. Same reason this is resistance. So when I come up, here, let me open it up. When I come up here, this is too high. This is the retail price. I go outside. Now, what this is called is mean reversion. Heavy on the mean, because the hard part of mean reversion is where's the outside. And it's very hard to know, because you won't know until hindsight. And in the open, it's very hard because you got no structure. So you're sitting here, with your jaw on the desk, and you're going, now I'm looking at this and I'm saying, I want to get long, where can I get long? Well, this is resistance, you see. Let me put a little line on here for you. And my other area of resistance, well, let me put it out here. I'm going to skip the one in the middle for the moment, just to, we don't have too much going on here. So this was support, resistance, break below. This now is resistance. I'm going to put another line here. I'm going to do it. I can't help myself. So now I have my retail prices kind of scoped out. So as I'm going down, I know this is an outside edge and I'm looking for the long, okay? So I see absorption here, which I won't know until I cross above here and I break high. Now I have a trigger and my support in the microstructure is there. So if it's there and I cross here, which is resistance, I can buy it here. My stop is going to go there. I'm looking to come above here and I'm going for value area. Notice where the support is. Okay, so I get the opening swing high. I'm risk neutral. This is a target, but I'm going higher than my idea of higher anyway. Resistance again is back here, and I'm looking again. I'm just, doing my thing. I get taken out, and I break down. Now, let's look again. Variable high volume node. So what happened here? Two-sided trade. So I took a long. I got the opening swing high. Feeling pretty good. Looks good, Lewis. And then taken out. All right. So that's okay. It's just one trade. Let's keep a process going. By the way, if you guys have questions, post them up there. I cannot see them at the moment. If you're in YouTube, let me try to get these back up. It is a bit of a challenge here for me. How we doing in YouTube? You guys doing okay? One moment. Okay. Got a little something here. Hold on, guys. Sorry, little problem. Okay, I'm back. So we found excess here. Who knew? This is a statistical probability. If you're in TraderLab and you have to vet everything for yourself, we opened higher inside of range. I'm sorry, low. Wow, I got too much going on here. Yeah. Whoa, hold on. Yeah, higher inside of the previous day's range. So statistically, overnight mid is a 75% probability. This is here. Subject to your plan, you could target this. Now I have higher targets, so I'm just talking about me. I'm not saying it's a good plan. I trade for larger rotations. And the reason I do that is I don't need a high win rate to be profitable. I'm more interested in the bigger swings. So I look at what I do as probes. And the key for me is to get risk neutral. If I can get risk neutral, then I just see what happens. It's because it's all random anyway. So, and I do take full stops. I mean, it's just the business. So right here, this is too high. Notice where we come back. No clue. Not my job. And then we fall out the bottom. Now let's look again. Here we have a sweep and liquidity. This is a potential long here. Now this is structure right here. Sweep suggests the upside rotation. This is a liquidity trigger potentially, and if the trade's going to work, it's going to come here. It's called mean reversion. Let's just see what it does, and it doesn't have to do anything. So let's watch. Here's your sellers, there's your sweep, there's your order flow trigger. I'm just going to throw this over here and we'll see what it does, okay? And these are not trade recommendations. They might not be your trade. So here, so the way this would work is we have resistance here because we broke under it. We have resistance here. If you take a long here, you would take a stop there. Okay? Just saying. So now we get VPOC migration. Let's watch. Market's going down. It's horrible. It's terrible. Where's my next location? Outside edge, 61-ish, and settlement. I have nothing here, okay? I'm looking here. I don't have anything. I'm just saying, okay. VPOC migration. This is too high. Let me put it, mark this for you. And this is the new retail price. I'm going to label it. I'm going to call it a variable high volume node. And I'm still looking for longs. So I've not taken any shorts. And like you, I go, start going. So anyway, this was the last place. So this would be a stop if I got long here, but I can't get long here because of this coming down. So what this says right here is if I get this here and I hold this, I have to clear this to get long. So I didn't get, I was stalking it, nothing. So let's watch. Break high. So right here, the buyers now are here. Look at the buying, change in behavior. Where's my support? Now it's here because I'm above it. Notice where we came up to it, that there was the behavior right here. That's resistance. So we're going to put a little box around this thing. And we got this one up here. Okay, same thing, different location. Let's see if we can do this. And what else do we have? So this becomes the volume point of control. This is resistance. This is where you'd want to go. Let's see if we can get a trade in here. So the way this might work, this is your target. This is where you're going to try to go. So if you get long in here or here with the sweep, you are trying to go there for scaling. So this is a viable long here to there. And the reason is you're leaning on this. Now here, you might or might not be able to deal with this. If not, this has the sweep, the trigger, the location, the target, and then you got to see what happens. Watch. You'd scratch. We come down here. Notice where the resistance is. This is now support. Very annoying trade. I found it very choppy. So I was taking a lot of trades this morning. Wasn't thrilled about it, but I just have to do what I got to do. So this here, this is my location for a long. Didn't quite get there. Once I saw this, it was back to here. So subject to your plan, if you can deal with this, you can take this to here, and then you're looking to come out the top still. And look what we do. So, if you take this, you got to scale, and we're still looking for the upside targets. I come down. Where's my location? I gotta move this out. Now, I don't know what it's going to do. So if you're looking for that, I don't think you're going to find that in trading. I can identify locations of behavior, and I put them on my chart and I wait. And then either it comes to a location. So if I don't know what it's going to do, right? And I'm going to make a wild proclamation. You don't either. So if we know we don't know, this is a business of alignment, you know? So this is the support area. So here, if I take a long, which is all I've been doing all day, I know I got this, okay? So when I see this liquidity, I take a long, my stop goes under here. That's the way I trade it. Not saying it's good. And I also know right here is too low because my buyers, you see this little node right here? That's the retail price. And if it's too low, I leave it. So I can put my stop under here or under here or under here. You know, that's all subject to your plan. I tend to keep further away. Notice where we come. Can you see why? So my stop does not go here, it goes away because the market can rotate. So the longs, you know, are from there to the scale, or, you know, so from here, these are all longs. These are all longs. This is the same trade, long. And what am I seeing? Buyers are here. The buyers are there. All this is long for me. I'm not saying it's good, I'm just saying it is. And where am I trying to go? Into the stops up here. Now with this, and then now I'm going to tell you, this kind of stuff, very annoying because you get on a trade and, you know, it's all wonderful, and then watch. Big seller, VWAP. Now, right here is high volume, right there. Let me show you. And right here, which I don't know until hindsight, so we got to get over it. Watch. High volume is there. This is like your volume point of control. I break low, and I come to VWAP, or full session VWAP, I think it was. This could be a long. This is your resistance. Or if you're a counter trend trader, this could be a short. I'm only trade from one side. I just don't want to be bothered. Just me. I'm not saying it's good or bad. I'm just saying it's what I do. So where am I trying to go? As long as I'm above down here, I'm okay. Now, if I'm using a trade management process, I get taken out, you know. Okay. Then what? Well, either long here to there, or nothing, or we come down, and then I have to look and see where my support is, which is way down here. Everything fails under here. Until it's under there, I can be taking longs anywhere that fits, and I'm going to be coming back here. This kind of volatility will get you. And the thing to do when you're trading and you're in this kind of thing is just take the trades and deploy your trade management. All this is random. We have no control. Now, here we get something called VPOC migration. It's right here. This is important. Let's look at it. By the way, you guys have your head's not on the desk? Oh, well. How are we doing in YouTube? You guys have questions? So we get a sweep here, and this is another fuel. In other words, this is stops, another high. we're going for that. So remember what the premise is at the top of the stream. The market is short, and what does the market do? The market goes up to go down and goes down to go up. Next target, ETH high, over 98% probability. We also have the first hour's high or low, about a 98% probability. This is our next target, 15. And I have this sweep coming up here. So this is, I put a limit order out and just, whatever it does, and manage the trade. Notice where we go. We're up here. So that's a target. So up here, target, sweep. So that was a scale for me, or an exit depending on the number of contracts, not relevant to this. And then I pull outside, make a new high. I'm now above this. I get VPOC migration. Now, very important. Let's look at what we're going to try to do with this. Now, there's a language involved here. And this is what this is. If everything below is too low, and you'll notice the behavior. I got to do this, by the way. By the way, these are ads. Also, this is more advanced. This is an ad. This is an ad. I don't really want to go into those too much, but these are either ads or trade management structures that you can use. This also could be an ad. These are order flow triggers, so they're a bit different. So when we come out here, if you're trading order flow, you might be looking at this, but let's assume you're not. You're sitting here with your tongue on the floor, and you're going, what's going on? Resistance, right? Wasn't this previous location? Resistance, break. Now, VPOC migration says this is the highest volume so far in the developing daily time frame. Here's a couple other things you need to know. This is an outside edge called a low volume node. Let me put this together for you. An outside edge of a distribution is like, remember, on sale. It doesn't spend time. So if there isn't business being done at an outside edge, because the market's not staying here, that is showing us demand. So it's here and it's also there. Okay? So, but this is the one because I have the liquidity, I have outside. So this is an area, ETH high. All of these are areas for potential longs for me. Now, let's come back here. This is the retail price. The market rotates down. I have support here because that's where my buyers were. Now, I have no clue, I am the clueless. I come outside, and the problem, of course, with mean reversion, the challenge, really, it's just the nature of it, is this is the mean, and this is the mean. So if I pull outside, and we don't know where, that's the challenge, I can return to it there. Now, when the mean drops down, it might mean that it's too high, new retail price. And if I pull outside, this is resistance. And I can just go bang and fall out. Well, instead, I break above it and pull back. This is a trade for me. It's a long. Here, stop goes under here. I have to get a tight scale, which I can take in here, and actually I tend to go, if I know there's shorts in here and there's stops over these shorts, I can target this because I know there's buyers here, and I'm going to sell for my limit. I need buyers, right? So buy stops or buyers, I'm going to sell. Okay, and their stops are here and here. Well, for me, where am I trying to go? North. So at 9:30 Central Time, we have something called the IB. And the IB has over 98% probability of getting taken out, either IB high or low. Pick one. Well, if the trendish is up and the shorts are getting squeezed, I don't know about you, it's longs only and sticking to it until the structure fails. So what do I do here? This is a long for me. This is a scale for me, and then it's just manage. Now this is sitting here. I have to be aware of this. Let's watch. Support, support, and of course this out here is support. So these are structured trades. Now I have to tell you, this rotational stuff, you're going to take stops, you're going to get taken out, you're going to get frustrated, and it's just the nature of it. There's nothing you can do about it. It's not under your control. Remember, the only thing you control in this business is what you do, hopefully. What's this? Support, right? What's this? Too high. What's this? Too low. I'm not paying that. Wait a minute. Are you sure? Yeah. Absorption, outside edge, mean reversion. This is the most basic, and when I mean basic, the most important thing to learn in trading is how the market works, in that the market is most often rotational. Even if it's directional, it's going to rotate over itself. It has to, because right in here is an example. There's longs and there's sell stops. So if I come outside, I'm going to take some of those stops. But if my buyers are waiting for it, then the sellers up here, though, they become buyers, and I can squeeze them. So in the higher time frame, we're squeezing the shorts. In the intraday developing time frame, we're also doing the same thing in shorter time frames. So I have to know if this is too low, and maybe now this is too low, and I have over 98% probability of taking this out. Let me ask this astute group of traders, and the IB is set at 9:30 Central Time, which is the current high of the day was back here somewhere. There. If I take this out, which is after 9:30, then I can continue getting long as I hold this level. And I can take this, and my next target is 23 to 25 right here. So this is the next target. So let's look. Next target, and this is, remember where this all came from. Let's come back. You have to see how pieces fit together. Now this is today. This is our target, 2375-ish, right wherever it is, there. There. So this is the target, this is the target, okay? So this is where we're trying to go. Now, the developing, so this is, and let me tell you why it's a target so you understand. You see this profile out here, this takes in all the volume since we've ever been up here. And this is an outside edge, so it sort of goes like this. Too low, retail in a higher time frame, high volume, outside edge. So if this gets too high, I can come back here. Doesn't mean it has to or it ever will. I can also come back here. So the targets for today were this, and if I can get through here, maybe 45. That's it. So you could be done. Here's the 45. So that's out here too. Now, doesn't ever have to get there. So if you're trading the longs, primarily the trade is done. Now, so what do? You just have nothing left to do? Well, if you're in the business, you would understand that your job's not to keep busy. Your job's just to take the trades, So let's come back and look at this. This was too low, wasn't it? And where's my buyers? Weren't they here? What else is under here, Tom? Stops. So if I come outside, and this is still mean reversion, If I get and this is my location. So right here, I'm come under, going to 0. This is absorption. There's a trigger. I'm now above this. There's my micro high volume structure. This sets up a long, and the idea is to come there. And then you could either be done with the trade ahead of this high, or you're holding for the higher, or both, That's up to you. What we know is this is too high. Let me mark it. And the sellers were sitting up here. That's why the market went down. Brilliant. See where it is? And this is the order flow. So I have the order flow, and I see this come in. So the only way I don't know what's going to happen, but when I take a long, I scale and I hit the next target. And then if I'm running a 2-lot, if I was, I'm taking them sequentially. Long, scale, scale. Done. That's my trade. If I get over here and I am running more than 2, then I have the next target at 45. If I'm running 2, the trade's over here. Why? Because my sellers are here. If my sellers are here, there they are. Do you think it's possible when I come back here that I'm going to get my sellers again? Maybe. And then look at this. What is this doing? Skewing the book. See it? So in your plan, you need to know before we get here what you're going to do. It can't be, in my opinion, now it can be anything you want it to be. Let's see what happens. If you do that, then you're going to be out of the trade, under here? And maybe we are going to go higher. This is where trade plan comes in. So there's some traders, they're going to keep their stop below here, and they're giving this MFE back. And they're going for taking out the high of the day and going to 45. Other traders in their time frame are going to scale here, exit there. What's the right one for you? It's a great question, isn't it? Because the answer is in your plan. Now, the thing that you're going to find that if you come to TraderLab, you can learn the mechanics, market mechanics, and how the market works. You can, in my opinion, you can learn that if you do the work. Now, the other part of this is, what time frame or rotation are you operating in? Remember at the top of the stream, I said, this is time frame or rotational dependent. Some traders are going to hang in here and they're going to go for 45, and they're going to keep their stop maybe at the low of the day, and they're going to ride through all this noise. Other traders, if they give this back, they're going to get depressed, and and the lunatic inside their head is going to go, I knew it was going to do this. I should have got out there. Why didn't I? You go through all that. Well, you can't push yourself through that. You have to know before you put a trade in exactly what you will do, not what the market will do, because we can't know that. So the idea of the trade plan is just to know what you'll do. And if it has an edge, it's going to happen. The edge will show up if you execute. That's the whole point of discipline. Random distribution, nobody knows. I don't know, you don't know. We don't need to know. What we need to know is where our trades show up, why they might have an edge, what is the reasoning to get long here, why would you scale there, because this is called mean reversion. I always say, heavy on the mean, because it's where's the outside edge. That's the hard part. And I already know my sellers are here. So if I can see where my sellers took control, and these sellers, these icebergs, all these guys hanging out over here, we're going, thank you so much. Here, have some more. And then we come back. Isn't it reasonable to think possibly if somebody thought, remember how the market works? Oh, it's too high. I'm not paying that. Get out of here. Yeah, but Tom, it's on sale. Yeah, but this is too high. Well, let's come out here. What's this? Support. Break it. What is it? Resistance. There it is. What's this? Outside edge. What's out here? Support is out here. Here. If I come down, whether I take it or not, and I see absorption and a trigger, this is a long, right in here. and there's the buyers, there's the scale, and there's this. Or you could just come up for this subject to your plan. And either you're going to get taken out under here or you're done. See, in TraderLab, you can learn this. What I can't do for you is customize the time frame you operate in. You get to do that using market mechanics once you understand how this works. And then you slice it up to your time frame. We have traders in TraderLab put a trade on, take a nap. Well, or at least get in the Barca Lounger. And they're trading to 45. Other traders in TraderLab are going to just trade to 23.24, which is the target before the 45, which is the right thing to do. You see? I'm not sure, Jay Dubs, can you clarify what you're asking me about this takes in the volume since we've been here today? I'm not sure what you're asking. 2021 has nothing to do. I'm not sure which one of these you're asking me about. The all the volume in the higher time frame composite or developing time frame. I guess that's the question. So too low, retail, too high, liquidity, rotations. That's what you got now. Now, if we hold out here or out here and we have to clear this, this is our outside edge. If we can get above there, then I'm looking 45, not a recommendation. If I can't get above here, then the day is maybe done. And I'm just going to trade rotations or be done. That, I'm just telling you, that's just me. I have no compulsion to be busy. I only want to take trades where I have edge and range. And again, that's just me. We always talk about this in TraderLab because, but what you're going to find, I believe, as a developing trader, it's not more trades. More trades equals more risk. How about less trades, symmetrical risk, but extended range on the rotation so you can actually make something, you know? So this one-to-one thing, so your stops might be one-to-one, but you need 4-to-1, 5, you know, whatever you can get out of a trade and know the range. So when I'm putting risk on, let's say down here or even over here, I know where I'm trying to go. And when it was over here or over here, I was trying to come there. I've got the range, you see. When I come out here, I still have range. And, you know, get risk neutral. If I come out here, it's the same trade from a different location. Back to here, no problem. What about this one? Well, this is a problem. If I get long on this, I'm scaling here. Is there enough room? Well, I know where my resistance is. It's now sitting over here, and now there's longs in here. So do I want to take this? Not necessarily, because of this. So I'm not going to get myopic. And if I don't take another trade and it holds here, and if I am going to take a long, I'm going to be looking at the behavior at locations. These aren't trade recommendations. Here's what I know. I cleaned out everybody who was long with their stops under here. You always have to look left. See, stops. They get taken out. Thanks for playing. Look at my buyers. So I still got my buyers. So where might we come? So I can look in here and I can look out here and it could do anything, okay? We might be done. Remember, the element here that we were trying to get to was this. So this could be the high of the day. I don't know. It's not my job. I know it could be because it's an important location. Does that make sense? So let's watch the behavior. Stops are under here. So I have to watch. And this may just come back here. There's no range. Okay? This is like a shoehorn. This doesn't qualify for me. Here's the thing. Not a recommendation. You do your thing. I know there's stops here. And I know, as long as I know there's stops and this is a location, I can't do anything in here. So let's watch this behavior now. Once I come down into the stops, I want to see if the buyers that were in here come back. And this is my outside edge. So let's just take a look. No precision. These aren't trade recommendations. The best you got in this so far, unless we, at the moment, current condition is to come there. So let's see what it does. Not trade recommendations. I just took out some stops. So now I want to see right here, this is microstructure. Right here, this is a micro element to observe. Not a trade recommendation. Let's just see what we can see. Micro element. Absorption is here. This is a micro support. It's right in here. So if we take this out, you keep going. This is an area to observe right here. And these aren't trade recommendations. These are not necessarily trades I would take. My interest is in helping you to read behavior and understand why this might go there. Okay? We need to understand the why of the market, not what it will do, because we can't know what it will do. We can learn to understand what it might do, where it might do it, why it might do it, why we might come there. And this is market mechanics, you see. Now, not a trade, right? It's just microstructure and behavior. This little microstructure is a triggering structure. This is the test of the absorption, and it can do anything, remember. The idea would be for it to come there. And if it falls out the bottom, then it's got further to go, which it can do. So let's see what it does. Is this making sense, guys? Oh yeah. Jay, when I say it's all the volume, the composite in the higher time frame on the right side of the this is all the volume that's ever traded up here. So it's pulling everything in, but the market hasn't been up here. So the market, this is just showing what's been up here since we've been here. Now I have data coming in from 2022. It doesn't have to do that, because all this is showing is what's happened up here. So the 2022 is not really material to this. This is our resistance, remember. So if I can clear here, I'm looking at that. So if I'm taking longs, I'm taking only long continuation trades. I have to get risk neutral, right? So anyway, I hope that answered your question. Let's go see what this thing is doing. Now don't forget, this was our target. This was our target for today. And if we clear it, we have 45, right? You'll notice so far that's the high of the day. Now, this is not to quote impress you or show you anything more than what it might do. This is mean reversion. The idea of this is to go there. And either it will or it won't, This is microstructure. This actually sets a long up if it's part of your plan and qualified. This is not qualified for me. I don't take this trade. Why don't I take it? Because I can't enter on the head of a pin, most likely being around here. Let's call it 15 just to be generous. And I've only got, 2 points? That doesn't work for me. So for getting risk neutral, because this is my obstacle. So I need enough range ahead of this to cover. So if my entry is here, my stop is down here, you see. Well, not so much. So it doesn't qualify. But what it does is it's going to show you market mechanics. So even though the outcome is random, I know I got buyers here, and I know this price right here is too low, right? Can you see it? How are we doing there in YouTube? Can you see the mechanics and the behavior right in front of you? Not about predicting. Well, Ron, if you want to learn about this process in YouTube there, use the link in the bottom of YouTube. Come to the TraderLab because um, I do this every day. And not only that, but there's a library of webinars, plus it's out there in YouTube land. I do a lot of advanced methodology here, but I've made it simple. What I'm doing here is advanced because it's not indicator based. You actually have to learn how the market works. And I don't use indicators. I use measurements, of course, but I don't have the typical spaghetti because the spaghetti I found was the problem. Uh, every piece of spaghetti in your software toolbox, and ask yourself why there's 150 or two, whatever they got in there. You know why they're there? Because they all have random winners. But do you think any of them have a statistical edge that favors you? I'm going to suggest probably not. So you'll have random winners, and gamblers have winning, hands in the casinos. But over time, the gamblers lose. So maybe don't gamble. So if anyone is interested in this process and methodology, you're all welcome to TraderLab. There's no cost for it. There's a link in the bottom of YouTube if you're inclined. Um, and you can become part of the community. It doesn't matter how long you've been trading, what you do, how you do it. What matters is that if you're like most of us at some point in our career, as we're developing, we keep waking up with Trader Groundhog Day. Work hard, wake up with the same result. Why is that? Well, here's why. The process. What you believe the business is and what the business actually is might be very different. And if you're trying to fit into what you believe it is, and you probably believe it's about avoiding risk, being right, and all that, it isn't. You can't avoid risk, and this isn't a business of being right. The only right in the business is your plan and executing it, no matter the outcome. Losing trades, winning trades, we all have them. Losing days, winning days, you're going to have those too. Um, the ultimate determination of your potential to create sustainability in this business is following your plan, not the outcome. We all have multiple winners in a row, and it boosts our ego. Then we have multiple losers. We want to change our process. Oh, it doesn't work, it's broken. That'll take you out of the business. You have to find a trade that you become intimately familiar with so you understand it and wait for it. It's like waiting for a bus. Do I set alarms? Yeah, I do set alarms. Are you guys getting a loud VHVN in there, or is it just in the background? How we doing, guys? How we doing in YouTube? Please give a like if you find this interesting. You're all invited to the Trader Lab. No alerts audible? Okay, thank you. Uh, you know, basically Bookmap, when you compare footprint and Bookmap, basically footprint's a numerical representation and Bookmap's a graphical representation of similar behaviors. I find that Bookmap is light years ahead of the footprint. Um, it's not comparable because I'm visual. I don't want to look at numbers and have to go look at the individual price and you know what's going on. I can look right here and I see the limit order book. I can look at the delta here and see that there's sellers here, and there's where my sellers took control. This microstructure right here where the volume is, you can see it all the way to the right where the volume is, it's too high. That's a sell trigger. If I can't get above the volume, I'm not paying that. I come back to the next higher time frame volume, which is this. This and that in there are the same. They're just different time frames. When I come down here, I'm outside. If this is too low and I have a trigger, I can buy this, and I'm trying to come there. So outside back here. If I don't get scaled and it breaks down, I take a stop. This is the real world. Now here is very important. If I can't get back above here, then we're going south, and we're going to take more of these guys out. So I have to see what happens. Outside edge is there. So this is a very important location, okay? And it needs to clear this. If it can't get above here and get there, then nothing to do, But this is very sloppy. This is not my favorite environment. It's very easy to take a lot of stops in this because you'll overtrade. Let's see what it does. Buyers are here. Notice the buyers are there. Now we need to get the buyers involved again, or else we're going to fall out. So if you took something like this, you got to get risk neutral. That's all there is to it, because you're in balance. What I do when I trade reversion, it depends on the rotations. I don't want to get too detailed, but this is primarily where I'm going to try to go, up here, because that's the fair price. And I know my buyers are here. I mean, look at that. What's that? Buyers. What's this? Buyers. Last place my sellers are in control is here. My buyers took control. Where else were my buyers? Here and down here. Look at the thrusts, you see, of the buyers. For me, it's only longs. See what I'm saying? Can you see how this might work, guys? Or you're buying a subscription, good for you, congratulations. Be sure to, there's tons of education available on how to use Bookmap and the different tools in Bookmap. I mean, it is an advanced order flow tool, and you can use, there's so many things inside it. Now I'm a minimalist, as I like to state, because let's just say conflict is a problem, right? When you guys load the indicators on, you don't understand why you even do it. It's psychological. It's this need to be right and to avoid risk, all that, right? I get it. I built trading systems with the objective to accomplish the same thing. And consciously, I said, I want to squeeze the risk out. And, for the usual reasons. Well, what happens if you're in an environment where that doesn't work? Where do I set alarms? Ragnar, go to knowledge base if in Bookmap. It just tells you how to do that. It's very simple. Everything's in the knowledge base, so just check there. Notice the liquidity. So this is mean reversion. This is what makes it mean, is you cannot put your stop here, because it can come down, pick you off. I call this a stop pick. And the buyers that were here who absorb these sellers just do the same thing down here. Notice how this comes in. So I just don't do this, and everybody has to vet for themselves. If this is where the trade fails, my stop doesn't go there, because I could very easily get the stops, get these buyers back, and then do this, which is my objective, right? What was the objective of this? To go there. Where'd we go? There. We didn't do it on this rotation. How about that? Are you guys tracking? This is called mean reversion. Remember? Mean. And then if I can come out here again, then there. So the trade, and this is not a recommendation, is to revert to the mean. That's what this is, the fair price. And then to come back and check this. If I can't get above here and I break down here, then I'm coming the other way. And then if you're just trading a primary side, you wouldn't have any longs until further outside, maybe back in here where the buyers, so I'd be looking out here for longs and maybe down here. So I already know where I'm going to look for longs, not a recommendation. Out here and here. And if I can get over here, I'm looking for this right here. And then if I clear that, I got this. So I can be taking longs if it fits my thing, my plan to there. Risk neutral, if that's your plan, I'm just sharing. And then put your helmet on and sit down, get in your Barca lounger with the rest of us in the TraderLab and sit and work on your crochet. Mickey, you're asking me if I use any of the add-on packages. I do. I use the stop and iceberg detector. I use sweeps. Sweeps are a big deal. I find them very useful to help spot. It supports triggers and reversals. It can indicate or suggest. It's not. It doesn't tell you what will happen. It kind of just alerts you to what might happen. The best we have in trading is maybe. So sweeps. There's all kinds of stuff in here that you can use. And I don't use all of them. Remember, I'm a minimalist. But this is like some of the stuff. Set up checklist. This is the kind of stuff, by the way, when you use Bookmap. If you have a specific trade coming up, let me just see if I have anything in here. Whoops. Maybe I don't. Oh, here we go. So this is like a trade. So you can make them up yourself. Passive accumulation for whatever it is. And then you weight them. So before you get all, carried away, you can have your setup. And you can then have the criteria. And what I always suggest in TraderLab, this is not a video game. We anticipate locations, and then we look for supporting structures or a vetted trigger for behavior that's auction-based. So this to this is an auction trade. So, but you can do this. You can create and give them names and then pull it up so you make sure you're not getting crazy and that you're disciplined. Liquidity tracker. Bracket trading, execution pro, trading statistics, liquidity marker. This shows me the adds and pulls on the liquidity. So I can see what's going on in the limit book. The footprint, if you're inclined, me, not so much. Outside liquidity, price levels, stop and iceberg, sweeps, there's absorption, VWAP, Market profile, they just added. Can't tell you much about that. I haven't tried it yet. It just showed up today. It's the TPO-based profile. So if you guys are familiar, that was when we only had time and no volume. So if you're into the previous time-based market profile with TPOs, that's up to you. So where was our trade here? Let's come back. Long to there, to there. Next is this, and it's just trade management. Can you guys see how this might be useful? These are not, remember, yeah, I think I answered your question there, Jay. No, it covers that profile in the higher time frame, covers all the volume that's traded up here since the market's been here. So it covers, you can put any date up on top. It's not going to make any difference because it's only showing the volume that is traded since we've been up here. Can't show you anything more than that because there's nothing else up here. So what's up here? This is the all-time high, so you can see there's nothing else here. So that's why it's just showing you what's here. And remember, if I get above this, I'm working 45. Not a recommendation. Does that answer your question? It's all this is showing you is the volume. That's wherever the volume has been, and there's no other volume up here except from here. That's why you can see it. If there's nothing up here because there's no volume up here. So the fact it's back to the year 22 doesn't matter. It's just been there for a long time, so I don't need to change it. Does that make sense? Does that answer your question? These are called TPOs. So I'm running two different kinds of profiles here, and I don't need the TPO one, but I use some elements of it, but it's really not material. This comes from market profile. It's called a single, and a single is where the market ran quickly, and it's from over here where we did the Acapulco cliff dive. It was urgent, and the market has a tendency, not predictive, tendency to come back to these areas. It's like an internal gap. So it has a tendency to come back. That's why it's a target. If I get over this, then I have 45, wherever the heck that thing is, which is out here. And it's have to go to a higher time frame to see it. So what am I doing? Great question. Here's what I am doing. This is the retail price from yesterday. It is too low. There was about a 67%-ish probability to get there. It's too low. So if I'm trying to get long, I can look here because this is the fair price. Going in different time frames, this is a fair price. That is a fair price in a developing daily time frame. Remember, this was too low from yesterday. This is the current price now, highest volume. This is resistance right there, this outside edge. If I get through here, it brings me back there. And maybe even out here. I don't know. Not my job. So my job, longs only, using counter rotations for continuation longs. Why? Up until it isn't. Does that make sense? So what's our last trade? And these aren't trades, I'm just showing you ideas. I don't call trades. You don't want to take my stops, right? Where am I trying to go? Where was that target? Here. Here. You notice, and here's why. Sellers were here. See you later. What's back in the book? The sellers. I want to get scaled ahead of this. So I'm not rigid, let me tell you. I understand I'm in a random environment. I understand that at any time I can come back here because it's mean reversion and the market is rotational. I know my sellers are there. So what do? Manage my trade. Accept the randomness. Don't worry about the small stuff. Just get the stuff right. Be disciplined. Accept the randomness. You cannot predict anything. What can you do? If this seems foreign to you and your nature is, I want more certainty, it's the wrong business. You can't get it. What you need to do is change yourself to operate in this environment, which is totally counter to anything that you have ever done before. It's a foreign environment. You can't take this environment and change it to fit your comfort. We are in a constant state of discomfort, and that's why I created TraderLab, to help you understand the business of trading, what you're trying to accomplish, maybe some tools that'll help you accomplish it and help you differentiate yourself from the outcomes of most other retail traders and potentially build a sustainable business. If that's your interest, I invite you all to TraderLab. Use the link in the bottom of YouTube. There is no cost for it. It is currently available at no cost, plus the TraderLab community, which is made up of traders just like you. If you're interested, use the link in the bottom of YouTube. Visit TraderLab and the Bookmap server. There's a lot of additional education, stocks, options, crypto, order flow with a high tier tool like Bookmap, and a lot more. Also, please leave a like if you found this interesting today. Help support the stream. Lets me know I'm doing a decent job and that you're getting some benefits, so it encourages me to continue doing this. Thanks again, guys. Thanks for visiting TraderLab today. I look forward to seeing you tomorrow.